Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone. We've just released our monthly India market outlook titled Shifting Winds. My name is Ravi. I'll be your host for this podcast. In today's episode, we discuss our macro and key sector views. On the macro front, we expect India's economic growth to stay above its long-term trend and ahead of its major peers over the next 12 months. This is likely to be driven primarily by fiscal policy as financial conditions continue to remain tighter than normal. Continuity of the past policy measures undertaken by the government that include greater public capex spend, structural reforms, incentives to boost manufacturing and infrastructure support India's medium-term growth outlook. On inflation, we expect the consumer price inflation to surge from the recent lows on fading base effects but track within RBI's inflation target of 2 to 6%, as disinflationary pressures from previous policy tightening, lower food article prices amid prospects of a better monsoon, and likely government policy interventions to manage supply-side concerns. On the monetary policy front, we expect the RBI to remain on hold in the second half of 2024, given strong underlying growth momentum and modest inflationary pressures. However, the central bank may ease the policy in first quarter of 2025 should inflation stay close to the medium-term target of 4% on a durable basis or growth impulses start to weaken. However, the quantum of easing in this cycle is likely to be shallow. Now coming to our asset class views, the strong resilience of risk assets discount a lot of positives, which include strong domestic growth, resilient earnings, and governmental policy continuity, which is reflective in the stretched valuation multiples. As such, we stay neutral on Indian equities. India's robust growth momentum, strong earnings delivery, and domestic investor flows are counterbalanced by stretched valuation premiums, both absolute and relative to peers. We expect volatility to stay elevated in the second half of 2024 as the government broadens its policy priorities amid a busy election calendar with assembly polls in several key states and a tight race to US presidential elections. Within equities, we are overweight large-cap equities given higher margin of safety in terms of earnings and stronger balance sheets to withstand market transitions. In our sector strategy, we have a preference for domestic cyclicals with an overweight on industrials and financials. We balance this with a defensive overlay by an overweight on consumer staples. Coming to bonds, we stay neutral as attractive absolute yields are counterbalanced by below average yield premiums. Improving bond demand-supply balance given lower government borrowing, higher RBI dividend, and India's bond inclusion in the global bond indices is a tailwind for bonds. In our view, the RBI's prolonged policy rate pause indicates a likelihood that bond yields have peaked. We expect the 10-year Indian government bond yield to trade in the range of 6.5 to 6.75% over the next 6 to 12 months. Within bonds, we stay overweight medium and long maturity bonds given their attractive carry and potential for higher price gains as bond yields decline. We also see better risk reward in high quality or AAA rated corporate bonds given attractive spreads and improving corporate fundamentals. In addition, India's real bond yields are higher compared to most other emerging markets. We see gold as a solid neutral holding. The ensuing decline in US real yields and USD weakness augurs well for the metal, especially with the strengthening of the negative gold real US yield correlation. Meanwhile, RBI's measured pace of gold purchases adds to the still robust official sector demand. Cash continues to remain a core holding and serves as dry powder for any future opportunities. Overall, on our foundation allocations, we remain neutral across all asset classes. We expect volatility to remain elevated in the near term given elections in the US and key Indian states, escalating geopolitical tensions and potential growth slowdown. We believe a diversified asset allocation remains a prudent strategy to tide through the near-term uncertainty. That's it in this edition of the podcast. Do reach out to your relationship manager for a copy of our market outlook. You can also find this on SC Invest section on www.sc.com/in. Thank you as always for listening. If you enjoyed this podcast, please like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, Reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.